So the issue here was not the reported numbers, as we talked about. Quarterly revenue, $862 million, 34% increase over comparable prior year period. They beat forecasts of $845 million to $850 million. Adjusted EBITDA was $249 million, which was beyond management's guided range of $210 million. And just to look at some of the business segment growth, Talent Solutions, which is roughly 2/3 of their total revenue, grew 45% year over year to $535 million. Marketing Solutions and Premium Subscriptions grew at 20% and 19%.
Yeah.
And those are their three major business
and it's not
segments.
surprising that Talent Solutions is 2/3 of their revenue, and that's what they do for basically professional recruiters and all that stuff. So
Yeah, and just as a refresher for the listeners, Talent Solutions recruiting are generally like the recruiting and hiring tools. Marketing Solutions, more of the content marketing, ads, things like that would show up in your feed. And Premium Subscriptions, their other segment, job seekers, recruiters. It's kind of a range of individual users to kind of like small scale recruiting and HR efforts.
So again, those were great results. The problem was guidance.
Mm-hmm.
Was it that low? Because they grew at like 30-35% in most of their segments.
Yeah, management offered a revenue target between 3.6 and 3.65 billion for fiscal 2016. And basically at the midpoint of that target range, LinkedIn is pegging revenue growth at about 21% next year. And you look back at what they've done the past couple years. So 2013 had year-over-year growth of 57%, 2014, 45%, 2015, 35%, and now they're pegging to 21% for 2016. I think
this is a really nice graph you made, by the way. I wish our listeners could see this.
It was a nice little chart.
Yeah.
I thought I was very proud of myself. And so you're seeing that decline happen. And so part of the frenzy here is slowing growth. And you've been seeing this march down over time, right? I mean, It's not crazy. Obviously, as denominators get larger, growth rates are going to slow.
Is it? We'll probably talk about this more in a bit. Is it like a growth saturation type of thing? Like, are they just as big as it's going to get and that's it, or what?
Well, it's not really an issue of user growth. That's been fine. Right. I think it's more that there was kind of this expected floor at a certain level. Maybe it was somewhere in the low 30s for growth, and that, given that they are not consistently net income positive, people kind of thought that, all right, we're going to continue to see this growth, and that will fuel all of the stock price growth and all the valuation that's built into the stock at the moment.
Should we read these numbers off to listeners? Go ahead.
And so it's not a totally fair comparison because the businesses are a little bit different.
Right.
But
and it's addictive. But
we're
going to compare them to Facebook anyway.
It's hard not to talk about Facebook when you talk about LinkedIn, right? And so just for context on what kind of growth rates they've been experiencing, 2013, 54% year over year, 2014, 58%, 2015, 44%. 2016, they're estimating between 30 and 40%. So they are also seeing a decline. If you look at the last 3 years, it is not quite as steep, and there's still a lot more upside.
Right.
Obviously, the model is a lot different, and it's much more scalable because they're just serving up ads.
Right.
But that might also have added to some of the pessimism a little bit.
Right.
If you look at what is underlying these revised growth rates and why LinkedIn thinks they might be, just not growing as quickly as they have historically, they're saying that Talent Solutions business segment could decline from roughly 30% growth in 2015 to mid-20% growth. And this is largely related to macro factors. They cited weakness in Europe, the Middle East, Africa, as well as some of the Asia-Pacific countries. And I think they're at roughly like 40% of their business outside of the U.S., and I think that's where a lot of their growth is coming from. And so a lot of the economic slowdown that we're seeing in some of those major countries abroad is going to be problematic for them.
Got it. Cool.